The market's kind of lollygag today. The spinning top or doji in the Dow with the overbought condition could indicate there might be some profit taking. We've had a good week so far. Going into Friday, you might be seeing some sell-off producing, but as long as the sell-off stays above the T-line, we're all right. The uptrend's still in progress. But there might be some profit taking during that next day or so. The NASDAQ also did a doji today, so that makes everything a little bit suspicious that might be we're running out of steam. But the obvious is we need to see the market open positive and trade positive to stay in an uptrend. If they open and start trading back below the low of this doji, that gives us a good indication there's going to be some profit taking and maybe using the T-line over the next couple of days as support. However, as long as the uptrend stays in progress, it allows candlestick patterns to develop. Notice Q-Core. When it broke up through the T-line, it stayed up strong until that one caveat about the T-line. The further away you move away from the T-line, the probabilities are pretty high that you're going to come back and test it, which Q-Core did. Did a doji right here on the T-line, and today they took it up hard. So you've got a left-right combination, basically a J-hook type pattern. So if this opens positive tomorrow, this essentially becomes wave 1, wave 2, now going into wave 3, which wave 3 should be equivalent to wave 1. This isn't anything set in stone, but the probabilities of this type of pattern occurring over and over are extremely high, and we get the advantage of seeing what's going on with investor sentiment based upon the signals. Again, a left-right combo is usually a very strong bullish signal, and a good strong bullish signal tells us if they take this higher, that the J-hook pattern becomes a relevant observation. And the slow, steady uptrend of the market allows patterns, like our recommendation on WBMD, as it was coming out of this fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. In this case, they gapped it up, did a doji, and then our simple rule of a doji. They're going to move in the direction of how they move it after a doji. Today they closed it up strong, which represents that we're probably still in an uptrend based upon the doji signal, number one, and number two, that it's still coming out of this fry pan bottom, gapping up, that more than likely we still have a strong price move. All the aspects of candlestick analysis is pure common sense that has been applied to the visual graphics of investor sentiment for the last 400 years. Investor sentiment does not change, or at least it has an extremely high probability of reoccurring in the same manner time after time. All we're doing with candlestick analysis is recognizing what those patterns are and taking advantage of those high probabilities. That'll be it. We'll see you in the chat rooms.